Simplicity is never a matter of circumstances. Simplicity is always a matter of focus. Ann Voskamp. Again, I put these sayings out for you guys because I want you to realize how important these teachings are. Simplicity isn't a matter of your circumstances. It's what you focus on. And the market, the circumstances of the market can be extremely complicated. There can look like there's a million permutations and things going on to confuse you. That is why we keep it simple, so you're not confused. We focus on price movement. Price movement is what we key on because truly, my friends, that's all we have. Everything else in so many circumstances is opinion, is subjective. Price movement is objective. It's what's actually happening. It's reality. It's what's really going on. That's why we key on that. That's why you don't hear me talk much about the news. I talk about what's happening in prices because the news will fool you. Buy on the rumor, sell on the news. That means the folks who are on the inside know what's going on. And by the time it gets to you, if you're counting on news, you're too late. You're not in the meetings. You're not insider trading if that's what's going on or whatever's happening. But you know what? You've got a better option. You don't have to break the law and be a criminal if that's how some people are making their money. You're following the big trends that are not subject to anywhere near, if at all, the manipulation in the minutia, in the small trends. That's why we step out and look at the weekly charts. I had a great call in today, a couple of technical issues during the call, but a lot of great information that we shared to the Patreon supporters. Appreciate all of them joining us, and we were so happy to be sharing that information with everybody today. Had a nice call, about 45 minutes or so, with our Patreon members. And again, if you're not a Patreon supporter and want to help defray some of the costs of the channel, we so appreciate that. As you know, we bring this to you every day for free. If you're not already signed up for our newsletter, you need to sign up for it. It's the daily review every day. The weekly review and forecast, or as we call it, the comprehensive review and forecast, comes out once a week, plus the PDFs so that you can print off your own daily market, weekly market, and trade worksheets, plus the special trainings. We have a special training today coming out to everyone. It's part 2 of vertical crossovers for chart mastery. And again, you'll see that in your show notes if you are a subscriber. It won't be in the other show notes. So again, please go to the channel, subscribe, chartingwealth.com. It's free. Nobody spams the list. We don't sell the list. It's just our list. And we so appreciate you supporting us. And again, like us on Facebook, subscribe on YouTube, and make sure to sign up for our email at chartingwealth.com. If you've not purchased our book, why have you not done that? If you want to supercharge your training, you do want to, right? You want to figure out how this works. Well, guess what? Our book encapsulates all of it there for you. Just follow the link in the show notes to buying the book, and we will get it to you. If you live overseas, you're going to have to email us. Some reason Square does not clear foreign credit cards, but if you'll email me, I send those books out every single day. We're getting those orders in. We're in the 11th printing. Email me. I'll send you a PayPal invoice. If you live overseas, cw@chartingwealth.com will get you a book. And let's jump into these charts. I so hope you were paying attention today, because there's opportunities that either happen today or will be happening tomorrow, possibly. Let's jump in. What do we see going on the S&P 500? Well, the S&P 500, of course, is confirmed up on the 2-day, confirmed up on the weekly. It was up 0.48% for the day. The derivative oscillators gaining upward momentum. Price percent oscillators heading up. Price well above the weekly trend line. We go from the 2-day, the weekly chart to the 2-day chart. We see prices above the 2-day trend line as well as above the weekly. Price percent oscillators actually gaining some acceleration going up. Derivative oscillator still losing upward momentum. That's because of the sideways slide and because we have that wick on top. The candle itself wasn't sustained. Now, again, remember, this is the First two-day candle completed in this week. Of course, we had the Monday representing Friday and Monday. This is the first full Monday, Tuesday, and Wednesday is what it represents. A green spinning top, meaning indecision tending up. Not a lot of indecision, but some. A doji means lots of indecision. What do we see happening on the 4-hour chart? We saw up movement in the morning. We saw some more up movement in the afternoon, but not enough to cross over. So close. Yet it did not happen on the 4-hour chart. In fact, things just sort of topped out somewhere around the 299 mark, 298.65. The derivative oscillator is still negative. Perhaps there'll be a nice bump up in the morning. Things will move above. See where they've sort of stopped leveling out again? Right there at the 298.50 something, 298.60, right in there is where we've got something that's holding things back. Is it going to get higher? We're just going to have to wait and see. We're going to have to wait and see. And if that 4-hour chart crosses over, or is this going to be a ceiling? And it's just going to stop it. So let's watch and see. If we see that 4-hour chart crossover going up, that sure gives you the ability to jump into more up moves. So watch the S&P on Thursday. Let's talk about the Qs, the NASDAQ 100. Start with the weekly. Remember, we had a weekly vertical crossover happen at the end of this prior week on the 5th of July. And so far this week, what do we see going on? I'm going to have to move the line vertical crossover aside so you can see the candle. We've actually moved higher as far as candle bodies go, and the wick is higher this week. That's a good sign. Price movements above the 2-day trend line and, the weekly trend line, and the derivative oscillator is positive, growing positive now, and we see the price percent oscillator pulling away from the red signal line. We go to the 2-day chart. What do we see there? We see we had a red spinning top before, indecision tending down for the one ending Monday. This one representing Tuesday and Wednesday is a green open candle with a higher wick than the prior candles on top. The price percent oscillator actually heading up at a stronger angle than it previously had been. Derivative oscillator continuing to lose momentum. Let's look at the 4-hour chart. Look what happened. We had things crossing over in the morning and did end up completing a crossover in the afternoon on the 4-hour chart. What does that mean to you? It means you can look for a potential jumping in point tomorrow. Let's see how things shape up on the Qs. Now, if there's a huge pullback in the morning, that's going to kill that for you. But again, if we see things continuing to rocket up, you may very well have yourself a jumping in point. So keep an eye on that. I darn sure am. We go from stock indexes to 20-year bonds. What are bonds doing? Sliding sideways now for about 3 weeks. This latest shows more weakening. We have a red spinning top. That means indecision tending down. We push through the weekly trend line, so we're below that. Price percent oscillators heading down, hasn't crossed over, still in a confirmed up move. Derivative oscillators losing momentum. Go to the 2-day chart. You can see we now have 4 candles of strong, solid red box down movement. Crossover going down on Monday on the 2-day chart. And again, see the derivative oscillator accelerating in its downward move. Price percent oscillator now pushing through the weekly trend line on that 2-day chart. And we go to the 4-hour chart, and you can see where the real down movement started. Big down push on Friday in the morning, followed by more down movement Friday after, well, a little bit of a recovery Friday afternoon, then a sideways slide, some down movement on Tuesday morning, and then down Wednesday morning and afternoon, pushing through that weekly trend line. So again, things moving down on bonds, weakening significantly. Don't have a trade there because the weekly's going up, 2 days going down. So we'll just continue to monitor bonds, see what there is to see. Go to gold. Were you guys paying attention to gold today? Let's look at what's going on. We see on the weekly chart, gold, of course, crossed over going up back on the 7th of June. It went up for 3 weeks following that. Then we had that pullback crazy week ending the 5th of July. And then this week is starting to try to build again. Prices moved. It's above the weekly trend line. We see the derivative oscillator is about flat, price percent oscillator going up. We go to the 2-day chart. What do we see there? Well, again, a sideways slide underway. The price percent oscillator had been going down, but it's flat, maybe going up a little bit now instead of heading down. Derivative oscillators continuing to lose upward momentum. We've ended the latest 2-day candle with a green spinning top. An open box green spinning top again means indecision tending up. Prices above the weekly trend line. We're going to have to redraw this 2-day trend line at some point when we can do that. And again, 2-day still in a confirmed up move. Weekly's in a confirmed up move. What's happening with the 4-hour chart? My friends, it is trying to cross over going up. Keep an eye on it also on Thursday. Why? Because things are trying to cap somewhere around that 133.70 mark or so. That's where things had stopped on this previous attempt. And what we want to see is, are things going to push up through that? And if we cross over going up on that 4-hour chart in the morning, be prepared to jump in for more up moves in gold around noon on a practice trade. Watch for that. See if that happens. It may. If it doesn't and gold just flounders at that 133.70 mark, then it does. But let's see if it can push through it and sustain that. And hopefully we'll see gold take off again crazy like it did for a few days back starting on the 20th of June. We'll see. We'll see what it does. Remember, the stock charts lead us. We do not go out there and gamble. We practice trade based upon the evidence given to us by the charts and the rules we've set up for using that evidence. That's how it works. 10 to 15 minutes a day is all we ask. Buy the book if you haven't done so. If you want answers to your questions, they're there. And it's a great way to supercharge your training and to put yourself many miles ahead in mastering these charts. Because think about it, friends, you master the charts, you've got a virtual printing press right there in your own mind and on your computer screen. And that is what you want to do. Print money, print money, print money. We're talking about virtual money as you're practicing and learning how to do this. We're not a stock calling service. We're an education firm. We appreciate you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.